Let's get started. So Impax Asset Management is a firm that I founded in 1998. And what we do is we manage money for institutional investors and private clients around the world. And the investments that we make are all in the area of sustainable development. So we have a very strong investment idea, which is that what we call the transition to a more sustainable global economy is going to lead to great opportunities for growth and for exploiting mispricing of securities, equity, debt, etc., over the medium to long term. And we built a business which today is managing just over $45 billion on behalf of clients around the world. So what you see today is the slides taken from our semi-annual report. The presentation in full is actually on our website, and this is a distilled version, which of course will be available on the website as already mentioned. So quick overview, we are pretty unusual, if not unique, in being a sizable investment manager on a global basis with this investment idea. We don't do anything else. We've been doing it for over 2 decades, and we've got more than 200 staff, 6 offices, of whom 61 are investment professionals. We've got quite an interesting approach to distribution. So we are very much a global firm. 85% of our assets under management come from outside the UK, and we have a large number of routes to market. So that gives a very diversified client base. And we're ruthlessly focused on trying to make money for clients. So what we do is not about saving the planet, it's about trying to make great risk-adjusted investment returns. We run 4 types of product. We've got about, I think, 13 different investment strategies overall, packaged in around 70 different funds and accounts. But those 13 strategies fall into 2 areas. So our so-called environmental markets strategies are a group of thematic equity products, which have been running since the late 90s and invest in the solutions to environmental problems or companies that are providing those solutions. The gender lens and sustainable infrastructure thematic areas are providing growth and income respectively, so more thematic areas. And then our so-called sustainability lens strategies are more core equity and fixed income products that are serving sort of mainstream non-thematic demands from or requirements from our clients. The distribution arrangements that I referred to are really best thought of as an international set of relationships. So we have distribution partners from as far afield as Canada through to Japan and Australia. We have our own direct sales force in the UK and also a second direct sales force in the US. And that's meant that we've got a reputation and brand recognition and clients actually in all corners of the world, at least the ones shown blue on this chart, with clients in all geographies that are shown blue going back more than a decade. So, as I said, this is the slide deck from our semi-annual returns or results. So the 6 months to the end of March. During that time period, we increased our assets under management by nearly 50% to £30 billion. That's increased again in April and May to £32.6 billion or $46 billion. We've had fantastic, from our perspective, levels of inflow. So £6.8 billion of new money coming in the door over a 6-month period. We completed the acquisition that we made in North America back in 2018. So the earn-out period from that is now complete. And actually the acquisition of Pax World Management is a really important stepping stone in us creating a business which is designed to be sort of equally branded between the UK and the US. And I think that's a very strong platform for further growth, the fact that we can claim to be a domestic US manager as much as a domestic European manager. And so our outlook, we think, is very rosy. Just some numbers behind the financials. Again, this is just the 6-month numbers. So we were able to turn our rising assets under management into very strong revenue growth and profit growth. And crucially, as what's shown in the bottom right of the slide, we were able to announce a doubling of our interim dividend to 3.6 pence a share. So a little bit more about our investment idea. This is not about values or ethics. It's about a fundamental belief that the economy is in transition, that given rising populations, rising standards of living, and scarce natural and environmental resources, there's great opportunity for businesses that are solving these sorts of constraints and providing solutions. For example, in the area of clean energy, the switch to zero emissions vehicles or clean transportation, the dematerialization of the economy, the opportunities arising from personalized healthcare and fintech, these are areas in which we've got deep insights. We're finding that with the new Biden administration, there's a lot more support in terms of policy in the markets that we're prospecting, and the new China 5-year plan, together with the European Union commitments through, for example, the Green Deal, suggests that the outlook is very rosy for the transition to a more sustainable economy. The number of investment opportunities is growing rapidly. I've touched on many of these areas already, and we are, through our investment track record, showing that you can produce market-beating returns by investing in portfolios of in these areas. Meanwhile, asset allocators around the world are increasingly persuaded that this is the future. This is an area for them to get more exposure to, and Impax is, of course, a well-known brand in this space and well placed to serve more clients. So if we turn now to our more recent successes, broken down in 4 different geographies, we've got a very powerful mandate with St James's Place, who have selected us to run one of our sustainable lens strategies 3.5 years ago. And we also have a broadly based set of UCITS funds, open-ended investment funds based on a platform in Ireland, which are registered for sale around many countries around Europe, crucially the UK. Great progress in Scandinavia, and also in Australia, we've signed a new distribution agreement with part of the Challenger Insurance Group, which is a very strong, numerous sales force who will be promoting our products out in Australia and New Zealand. And then we've also had great success in Japan through a mandate with Nomura. North America, the Plax platform plus our own institutional distribution, which has been going now since 2012, has continued to advance. So many more wins on platforms and with broker dealers in the US, but also quite a lot of new business in Canada. Quite a few numbers on this slide, but I think if you focus on the bottom row, which is the Morgan Stanley Index, All Country World Index, which is a typical proxy for global equities, and then compare the 6 lines above it, which are our 6 environmental markets thematic strategies, you can see here a nice track record of quite compelling outperformance of our thematic range versus the generic index, which is usually the comparator that most asset allocators are looking for managers to beat. So this track record is the foundation for our not just our recent results, but also for our confidence about the future. And then our sustainability lens strategy shown on this next slide, a little bit more variegated here, given that there's some fixed income strategies here and therefore different comparators, but you can see some very good 3 and 5 year numbers across the board. In the last 6 months or so, we've had a little bit of headwind in terms of a temporary rotation into value rather than growth, which meant that our global opportunities lead strategy was slightly behind the market, but already signs that that's bouncing back. So today our assets under management look as follows. So two different formats here. On the left, you can see the breakdown by what we call strategy. So that's the strategies as listed in the previous 2 slides. This is nicely balanced or nicely spread across a significant number of products, meaning that we're not dependent on the performance of any one particular strategy. On the right, you can see our client breakdown. So we do have a very powerful relationship with BNP Paribas Asset Management, shown in the bottom part of that donut. Then in the top part, we've got our own mutual funds and the PAX funds, which are Impax managed, and then a number of relationships with third parties, as well as segregated accounts for pension funds. So nicely diversified spread of clients and underlying investments. A bit more detail now about where the flows have come from. Obviously, quite a lot of numbers on this chart. This shows in the dark blue lines the amount of money in £1 million arriving for us to manage over the 6 months to the end of March. There's a comparison with the 6 months in the first half of our previous financial year. So you can see both the relative and absolute spread. On the left, the column there is our UK and Irish funds. So the numbers behind what I've already said about the UCITS funds growth and the St James's Place mandate. In the middle, the BNP Paribas asset management work that we do, very strong performance from the Global Environment Fund, which is where the Nomura money landed. And then on the right, you can see the broad spread in other parts of the world across continental Europe, Australia and Asia Pacific region, and then a nice contribution from our Pax World funds, as well as accounts elsewhere, for example, with NEI and Desjardins in Canada. So looking to the future, then we are basing our business plan on organic growth and a scale up of the business from today's vantage point. We've got plenty of capacity left in our existing investment strategies, and therefore the core plan is organic growth, leveraging further our distribution network and selling our successful investment strategies down that network. Having said that, there is plenty of scope for more products, and we are carefully innovating and looking to get off the ground new strategies. So we launched a new Asian fund, a version of Global Opportunities just for Asian companies back in January. And we have other ideas as well that we'll be considering getting off the ground with some seed capital. Final point on this slide is just to touch on our private markets work. So we are a private equity investment house, and what we've been doing since 2005 is partnering with the developers of solar, wind, hydro, and related renewable energy infrastructure assets around continental Europe. And what that allows us to do is to build the assets that are increasingly in demand from not just utilities, but also insurance companies, infrastructure funds, and more recently, oil companies. So there's huge demand for built renewable energy assets, and our network of connections in the developer community is producing some fantastic pipeline. So we are finalizing the investment period for our third fund in this area and looking to raise more capital in due course. I'm conscious that I've been through this fairly quickly. This is the final slide. Before I just summarize and see what you'd like to discuss in terms of questions, let me just touch briefly on people. People is well, the talent pipeline and managing our talent is right at the heart of our success. So with 200 people working for Impax now, of whom about 20% have joined us in the last 9 months, we've had quite a strong expansion, significant expansion. We built a new office in Dublin from scratch, which has 7 people in it and is now our European Union headquarters. And we've added to our teams across the board. I have to say that the collegial and consensus-based culture at Impax is the foundation of a very strong staff loyalty and retention. So we've had almost nothing in the way of material staff departures over the last many years, 5, 6, 10 years. Staff own 21% of the business, and therefore there's a very strong alignment with external shareholders. We do have a staff equity scheme that we top up every year, and we expense out of the bonus pool. And we are continuing to invest in talent development, career development, management skills, and ensuring that Impax is seen as a top quality place to work. Our recent staff survey, which we do every 2 years, had a 96% response rate and an 88% engagement score, which is you probably know, a measure for the level of satisfaction of staff at the firm. So just trying to summarize, I hope I've been able to get across in the last 15 minutes or so the fact that Impax is really nicely positioned in a rapidly growing market. The transition to a more sustainable economy is a mainstream replumbing of the entire economic system in favor of resource efficiency, low carbon industries, and an economy and society which is more in tune with the environment and therefore more sustainable over the long term. In that context, the number of companies providing solutions is growing rapidly, and Impax is really well established as having strength, depth, and a long track record in understanding those opportunities and building robust investment portfolios for asset owners to get access. Our route to market is nicely diversified. It's been built up over more than 2 decades. Our team is well incentivized to work in the firm over the long term, given the equity ownership and given the capacity headroom we have in our products and our determination to extend a scalable business model. We do think there's plenty more growth ahead of the firm, subject to neutral to favourable market conditions, i.e., not a collapse in equity market sentiment.
Ian, thank you very much indeed. Okay, let's get the questions up. I'm actually going to read out the most recent question, because one I had in my mind. Do you intend to remain an IHT-friendly AIM company for the long term? I guess secondary to that, is there any pressure to remain market, or are you happy on AIM?
Well, we've been on AIM since 2001, and I have to say we've had a very positive experience. It's given us a very nice profile. We've, I think, been able to extend our reputation and our connections through being on AIM. Having said that, we are highly cash generative, and with our organic growth plan, we don't really need access to capital. We don't really need a lot more regulatory oversight or filing requirements or governance. So we certainly don't have any plans either to go onto the main market or to take the business private. We're very happy being on AIM.
Okay, next question. Does IPX have a position on the winner for clean transport, electric or hydrogen?
Great question. I think the answer is that they'll be both. There is a real opportunity to scale up on the electric drivetrain for smaller passenger vehicles. However, for larger commercial and industrial scale vehicles, that is quite difficult, and fuel cells are probably going to be part of the answer. Having said that, out in Asia, where they have a shortage in many countries, particularly Japan and to some degree in Southeast Asia, shortage of available land for large-scale renewable energy generation, then fuel cell vehicles powered by hydrogen, which can be produced by electrolysis at large scale in places like Australia, do have a compelling future. So I think it's likely that 50 years from now we'll have both. I would expect that the electric drivetrain will be bigger, but harder one to call.
In your sustainable or environmental equity strategies, do you have a market cap minimum?
So we generally do have a market cap minimum for our thematic range, and it does depend on the product. So the small cap product is generally not investing in companies less than $500 million market cap. For our all cap strategy, that is a higher threshold of a couple of $1 billion market cap.
Next one. Could you please discuss how you see the resilience of the AUM under different climate scenarios, say 1.5 degrees and 3 degrees, plus your plans to disclose this formally in the future as required under TCFD disclosure guidelines?
So yes, we'll need to be quite careful how to interpret the scenarios here. So a 1.5 degree or a 3 degree scenario, that's obviously a statement of what the temperature will be like relative to pre-industrial levels over the long term, which of course, being many decades hence, is it's quite difficult to forecast. What we can say is that our environmental markets, well, all our strategies really are well placed to outperform in all of those strategies, in all of those scenarios, temperature scenarios, relative to a generic basket because of the fundamentals. I think the problem with talking about a 3 degree scenario or even higher temperatures is that the world will be profoundly shocked and life won't be quite as we know it. And so we need to be quite thoughtful about anticipating that might be the outcome, bearing in mind that those sorts of temperature changes are being talked about as taking place over the sort of the last third of the century, if not later. In terms of the TCFD reporting, then we will be reporting as a manager our our strategy, governance, risk, and metrics in line with the Task Force on Climate-related Financial Disclosures regulations when they come out. My understanding is that the open-ended funds won't need to report, but we'll probably have to report for our investment trust. And so, yeah, I mean, we're in the conversation about how these standards are being set by regulators, and I think there's quite a lot of detail to be worked through.
Thank you. How much of the share capital is held by retail investors, excluding staff?
Yes, it's a tricky one to answer that because we don't see the full detail. But broadly speaking, well, BNP Paribas owns 14.5%. Staff management owns 21%. So that's 35 and a half. If you look at the disclosed shareholders, and I haven't done that for a while, they probably own around 25 to 30% of the company. So on that basis, smaller investors probably own around a quarter of the business, quarter to 30% of the business, something like that. That might be an upper bound because, again, I'm not quite sure what's happening below the disclosed shareholders.
Thank you. Next question, are you getting retail investors in the US via the Charles Schwabs and other platforms out there investing in the funds?
So I'm not aware of any US retail investors. We certainly don't promote the stock on any US platforms. There are a number of US fund managers, small cap managers who are interested and I believe have taken a position, but I'm not aware. To be honest, I can't really comment on whether there are US retail investors. I really don't know.
Okay. Next one, do you have star managers?
Good question. So we very much avoid star managers. We have 2 managers on each of our strategies, and we describe ourselves as having a collegial culture based on teamwork. We have a standard process, and everybody working in the team is requested to write up their research notes and minutes from portfolio construction meetings in a team fashion. So no, we don't have star fund managers.
Culture seems to be very important in fund management companies. How do you maintain your culture with that rapid growth you've described, especially with people working from home as well, I guess?
Yeah, so I touched on this briefly in my comments about people. I think it's a combination of hiring the right people in the first place. So we go to quite significant lengths to make sure we've got the right personalities as well as the right skill sets joining us. We have been training our team leaders in consensus-based management inclusion. We have a pretty flat hierarchy and quite a number of committees that meet to discuss and take decisions on various delegated matters. We try and have fun. We're committed to staff being able to have strong and good work-life balances. And yeah, it's an ongoing challenge, particularly in times of when younger people are expecting different things out of work, and COVID's obviously produced some additional challenges. But touch wood, we're very pleased and proud of our staff survey results, and as I said, the retention rate's very strong.
Next up, do you have any plans for further M&A after the successful Pax World acquisition?
Well, the core business plan, as I've said a couple of times, is organic growth. Having said that, in the area of private markets and fixed income, we do feel that we could benefit over the medium term from carefully selected acquisitions, and we do have experience and a good track record of making acquisition with the Pax transaction and integration. So it's something we would certainly take a look at if the right opportunity arose.
And next, I think, and the final question. The question is asked, what's your expansion plans for Asia?
So we've had a research office in Hong Kong since 2007, and as I said earlier, we've launched an Asian opportunities strategy, so very much committed to investing in the region. We have some great partnerships with BNP Paribas in certain countries, with Fidente Challenger in Australia and New Zealand, and we have our own direct relationships in parts of Southeast Asia. So we will be hiring more people to join our Hong Kong team, and we have seen a real uptick in both interest in environmental solutions and therefore capital going into this area, but also in companies that we might want to invest in. So yeah, we're very much seeing Asia as an area for growth, Asia Pacific region as an area for growth.
Super, Ian, thank you very much indeed. Thank you for joining us tonight.
Thank you very much. Great to be with you.